Hello, everyone. Welcome to Fired Up, the podcast for marketers working in early and late stage startups. I'm Morgan McClintock, the CEO of startup marketing agency Firebrand. We've launched this podcast to interview the best in the business, but I'm not going to do it alone. So please meet my co-hosts.
I'm Nicole Pytel, Firebrand's VP of Content Marketing.
And I'm Chris Ulbrich, Firebrand's Head of Media Relations.
I'm Ian Lipner, a tech PR and crisis communications veteran.
We'll drop a new episode each week, so there's plenty of fuel for your marketing fire. Get the spark you need to take your startup to a whole new level. Hello, and welcome to another edition of Fired Up. Today is a very special edition because we will be going into a deep dive about our survey of 250 startup marketers in a report that we've called the Startup Marketer Outlook. And I'm joined today by Nicole Pytel. Hey, Nicole.
Hey, Morgan. Hey, everybody.
Chris Ulbrich.
Hi there.
And Ian Lipner.
Hey, everybody.
So the gang is all here, and we are going to walk through the report. It just came out. You can download it on our site and the resources section and various other places. And we'll put a link in the show notes so you can see. There's 40 pages in this report. You can see all of the data. So why have we done this? I think as startup marketers, we're busy every day in the trenches, battling away, trying to work out what, against an evolving market, what tactics are working, what should our strategy be, how is buyer behavior changing? And we get that feedback, right? And maybe we ask a few of our peers that we know where they're seeing success, but it's very difficult to get an overview. And so what we thought we would do is survey senior marketers, like director level and above, and a good number, 250 from across the country. They're not just in California or New York or in Austin. They're across the country, so we get a good view about how confident they are about hitting their numbers, what's going on with budgets, what's going on with their team, what are their goals? How are they doing against their goals? You know, what other initiatives have they got? What challenges do they face? And why do we do that? Because then we can all benchmark ourselves a little bit about how we're doing against our peers. And we can feel good, or we can get some inspiration about, all right, okay, I really need to tackle this problem because others are ahead of us. And we've broken it down by size, as I said, early and late stage. I think early, we're counting seed A, B, and late stage is C+. And by sector, AI, cybersecurity, enterprise, etc. So you can see, all right, where do we fit? And that specificity is really important because when you often see this kind of report, if you're a seed stage company, your experience is very different. Your resources are very different than a late stage company. And so it's very difficult to sort of use that information and make it actionable. So we wanted to drill down into the specifics. So you can download the report today. It's the Startup Marketer Outlook, and we are going to break down some of the key findings. So Nicole, why don't you just walk us through some of those key findings?
Yeah, absolutely. So, I mean, it's been a bit of a roller coaster in 2024. Good headlines, not so good headlines. So some of these are a little bit surprising, but all super interesting. So kind of the top 6, like the biggest findings that we pulled out of this research. Number 1 comes in terms of growth targets. And amazingly, over 50%, 59% of startup marketers are ahead of their growth targets right now this year. Fantastic news. Congrats to them. Absolutely. And another 57% of them are confident that they're going to stay on track. They're either going to stay on track or catch up and hit those goals by the end of the year. So some great optimism there. But of course, there's always challenges in startup marketing, and 2024 is certainly no exception. So what are some of the top obstacles? We dug into a lot of this in the report, but the biggest one, probably not a giant surprise. Startup marketers feel like, if there's something that's going to stop them from hitting their revenue growth targets, it's going to be economic uncertainty. So no giant surprise there. That being said, nearly a quarter of startup marketing teams are actually increasing their spend right now. So some good news there, and you'll find some interesting numbers in a blog post we're going to release in a couple of weeks, because it's not just the folks that are ahead of their targets that are increasing spend. So a little teaser for that blog post we've got coming out. So it's not just they're making more and spending more. There's a bit across the board happening there. In terms of goals, so we asked a lot about goals, and two really bubbled to the top. Two out of the top three goals for startup marketers right now are improving their overall marketing efficiency and reducing their customer acquisition costs. We're going to talk a lot about customer acquisition, both here and in the report, but those are the two big goals that we saw. And then in terms of customers, when are they going to start spending more? Well, almost half, 49% of the folks that we surveyed think that buyers are going to be more willing to spend in Q4. So just a few months away. So those were the big ones, the big fish right out of the box.
I think it's really interesting that most people feel like they're ahead of their targets and they're confident, because this has been a tough 18 months for startups, particularly as we've seen a lot of funding sort of dry up and they've had to do more with less. And we're going to sort of click into that a little bit. But there's been a lot of layoffs. Layoffs.fyi has been really clicking up the numbers there, and we've still seen them in wave after wave. And yet, if you look at the numbers in this report, people feel pretty good about their teams. Ian, what did you think about the team element of this report?
Yeah, I mean, you've got folks who are pretty confident about their ability to, reward their teams. So that, starting out with that, it gives you an indicator of the general feeling. At the same time, they also feel good about retaining their teams. And I don't know if we were asking that same question 2 years ago, if they would be so confident about that, right? So I think it kind of reflects where we may be right now, which is sort of this spot where there's lots of signs that there's opportunities out there, and you've got some companies going ahead and pressing the accelerator, and then others just sort of hovering a little bit over the brakes. We're not seeing folks go, gosh, it's impossible to find great people right now, and keep our great people. When you have that kind of combination of the willingness to reward their folks at the same time without the worry that they're going to lose them, well, it's for the right reasons, right? It's not just out of necessity. So, when I look across almost all the results, and I won't talk too much further into some of the other topics we have, you kind of see this sort of people are either coiling up to do something, or they're among the folks that aren't in that position. There seems to be sort of two groups emerging. Those that are ready to capitalize sort of on a environment where not everyone else is, and those who are being a little bit more conservative as they look toward that uncertainty.
Yeah, that's right. And here we saw a slight difference between early and late stage companies. Later stage companies feel a little bit more confident about their ability to sort of grow and retain their teams and to reward them. And by rewarding, we mean making promotions, giving them pay increases. So there was a slight delta there. And I guess maybe you'd feel that because a later stage company has sort of more resources and perhaps bigger visibility into budgets, etc., as things progress. And talking about budgets, let's sort of unpack that a little bit. I'd like to bring you in, Chris, on this. What did we find here?
I think it's fair to say that we found something very similar to what we just discussed on teams, where overall we had high levels of confidence across the board, over 50% showing some level of confidence, and really very few of the companies surveyed were on the not confident side of the scale. Yeah, I think this tallies with what we saw not just with teams but with the performance against plan, where you would expect that if you are performing to plan, you are spending your budget wisely and you have the funds to do what you need to do. It also goes to the impact that marketers perceive on the company overall. I mean, when you see the extent to which the budget results line up with the overall performance results and how similar they are, I think it's a testament to, at least from the marketer's point of view, how closely tied in the marketing effort is to overall performance.
Yeah, and if I could add to that as well, you see when you're talking about budgets, sort of the residuals from an early lack of confidence early in the year, right? We've heard this anecdotally from some brands that they weren't really sure how 2024 was going to go. And they seem to now be seeing, hey, it's not going so bad. It's going a little better than we expected. And maybe they were more conservative on their budgets in that first quarter or that, first half of the year. And now they're more ready to deploy that remaining budget, which essentially is a step up from that first half because of that early conservative move of holding back funds when people were pretty pessimistic, I think, going into 2024.
But if you're having trouble increasing budget and you're finding it harder this year than it was last year, our survey said that more than a third of late stage companies were facing similar things. And we can see this again in the funding numbers, like just the number of bridge rounds as companies sort of can't get quite, maybe they secured a valuation above and they needed where perhaps it needed to be during the ZIRP period and they need to grow into that valuation. And some of them had a lot of growing to do. So in order to fuel that, they've been doing bridge rounds and other sort of financing, debt options, etc. So those kind of companies maybe did struggle a little bit with budgets this year. So while the story is, hey, most people are ahead, the budgets are good, they're retaining their teams, they're growing their teams, there are still, particularly in late stage, a meaningful number who are still sort of getting over that hump because they were so far ahead on valuation and budgets before, they've been trying to catch up. And so I think maybe that sort of tells the story there. Let's talk a little bit about goals, Nicole, because you mentioned earlier we really wanted to sort of click into this. What are the key findings about goals?
So sticking with the budget for one sec when it comes to goals, something that I found really surprising, one of the most common goals, 28% of the startup marketers that we surveyed are actually actively building their company profile ahead of an IPO. Another almost 25% are really working to build investor awareness ahead of a fundraise. So yeah, it's been harder to get budget. I think pretty much all of them agreed that, yes, it has been harder to get budget this year, but there still is a bit of that optimism. When it comes to other goals, like I mentioned, the biggest, number one on the list is to improve their overall marketing efficiency. And we're seeing a lot of that with our clients in the conversations that we're having and talking about, how can we multiply our efforts, that kind of thing. I think that's a big thing. We all keep saying, oh, everybody has to do more with less, but they know that that's true. That's not just lip service. It's something that they're actively working towards. But also, some other top goals is obviously reducing the cost of customer acquisition. Our research found that it is just as hard, if not harder, than it's ever been to acquire customers. There's a lot going on with buyer behavior that we're going to talk about. And in such a kind of thin razor market right now, those customer acquisition costs, there's really no wiggle room there. So they're working really, really hard to reduce those costs. We've seen that absolutely. We've had existing clients and new clients come to us and say, I've got to get these costs down. What can I do? And that's why we're having a lot of ABM conversations, ABPR conversations, paid remarketing on the advertising side, nurturing on the content marketing side. It's a giant, giant focus to get those costs down. And nobody likes having high customer acquisition costs ever. But in 2024, there's just more of this pressure that we've got to get these down. But at the same time, startup marketers, they want to expand to new markets. They want to expand product lines. They want to maybe even just create or position themselves within a new category. So, a lot of expansion there, which is good to hear. And they want to build more of an executive team profile. They want to do some C-suite visibility. They understand that people buy from people. And, getting their execs out there is an important part of it. And then, of course, another big goal goes hand in hand with customer acquisition is accelerating their funnel velocity, because especially in tech, those sales cycles are so long, and even just shortening them by a few weeks or maybe even a month, that can make a huge, huge difference in what the numbers look like at the end of H1 or at the end of Q3 or just at the end of the year. So a broad range of goals that we saw, but all focused on really kind of the nitty gritty of getting down to business and making their business more efficient, but also growing it and taking advantage of new opportunities. So some interesting findings there.
Right. What struck me looking at these results and the relative order of the results, all of these goals are ones you would expect to show up on a marketer's shortlist. But the fact that marketing efficiency was at the top suggests to me that startups, while they are feeling optimistic overall and they're performing well, they're still in a bit of a defensive crouch. Their focus on cost control and, as you say, Nicole, doing more with less. I mean, obviously that's something you always want to do, but if that's your top priority, it suggests to me that there's still a good deal of caution in the startup community about what's coming next, some uncertainty there. So, you don't get the sense that these marketers are operating in some sort of YOLO, let's go for it, spend money hand over fist because it's all about the land grab and we need to acquire a position no matter what the cost because money is abundant and it's really about establishing ourselves in the market and we'll worry less about the dollars and cents down the road. No, it's dollars and cents right now. So I suspect we're still perceiving here in these results some lingering hangover from the pandemic, and also just we're in an election year and interest rates are not where most startups would like to see them. And it's really not clear what the future is going to hold in the macroeconomic future is going to hold over the next 6-12 months. I think these results reflect that.
Yeah, it would be interesting to see the split between, in terms of building a profile ahead of an IPO, I imagine that's mainly late stage companies. And, if you speak to most late stage startups, they're always on the path to prepare for an IPO in the next 18 to 24 months, which is sort of far enough out to not be pressing, but near enough in that we need to be taking steps. 28% who are planning to do that feels high, but probably sort of reflects an extended timeline a little bit on that. Let's talk about the initiatives that marketers are sort of kicking off here, because I think this is one where a lot of people can learn from. Like, I'm doing these things, like we talked about. Hey, I'm moving towards an ABM motion, or I'm really sort of trying to adopt AI or what have you. Let's just click down into those a little bit. Ian, do you want to just talk us through some of the findings on this?
What I think the headline here, and we'll see it across some other categories too, is, again, finding optimizations, but using data to get us there, using analytics and getting better at that, I think, is the initiative, so to speak. These companies are making sure that spend, that if they're lucky that it's flat, is doing more, right, with that same amount. When we look at these results, where they're interested in spending appears to be around finding ways to be more efficient. So yes. They're happy to get some new MarTech tools. They're not doing those for creative purposes, I'm sure. They're probably trying to get at a better marketing spend. That 18% say that they're going to redirect some of their marketing spend. 19% say they're going to increase it, right? So again, we're seeing some of those mixed signals, and it's not all cost savings oriented. But where are they going to spend the money? 21% are going to implement new marketing tools, MarTech tools. Some of them are going to switch teams, switch quarterbacks, I should say. They're going to bring in new folks to lead their marketing organization, or bring in a new agency. 17% said that. And I like this result in particular. 16.5% are just going to work harder and work longer hours. That's their solution. Thanks, guys. I'll assume they'll expect their agencies to do the same, which we all feel. I think we all know that we have to show more value than usual, right? Across all of these, what's good to see, though, is it's all about doing stuff, right? It's all about taking some action. Only 1% said, no, we're going to leave everything the way it is, right? So 99% of you're launching marketing initiatives and you're making them more valuable this year.
The one thing that's interesting, though, is we also asked where they feel a little less confident, because we talked about, they're confident about meeting their targets. They're confident about what's going on with their teams and being able to reward them and grow their teams, or at the very least retain them. But where they're the least confident is making accurate data-driven marketing decisions. So yeah, we want to invest in more tools. We want to invest in more MarTech, but they also don't feel real good about making decisions based on all of that. And something else that they don't feel real confident about is improving their marketing efficiency. So I think that speaks to a lot of what those tactics are. And yes, you can go out and you can invest in new tools. You can invest in new types of analytics, build new dashboards, whatever it is. But they're not feeling real great about what comes after that. And I think we're kind of seeing that a little bit with some of our clients where they're saying, okay, well, these are the numbers. What do we do about that? And I feel like we've been asked for and given a lot more of optimizing, we're running this email nurture and, open rates are great. Click rates are better than normal, but maybe not as high as we'd like them to be. Like, what do we do now? And that wasn't always a question that we got. They would have kind of maybe just rested their laurels on the high open rates and gone from there. So I think it's really, really interesting that they're doing more in the spots that they're not quite so confident in.
Right. And like those front end metrics, whatever they might be, like if it's paid media, it's impressions and click through rate and clicks, etc. If it's email, it's open rates and CTORs. Those are important to get right. Are we doing the marketing programs correctly? Are we running this efficiently? But you've got to then go a bit further down the pipeline into, okay, so those are generating leads, but are they the right leads? And how quickly are those leads progressing to MQL, SQL, and down the pipeline? Ian just said we're investing in all these MarTech tools, and there are going to be more. We almost have too much data because we find the beginning of a program is just spending time connecting all the platforms together and making sure that they're correctly configured so that you can actually see what's going on and build that dashboard. And the way these tools interpret data doesn't always work. Things will often break. Once you get into that HubSpot, Salesforce integration, and you're really getting into the the sales handover beyond marketing into the sales handover, and then sort of feeding that data back into the program, which obviously then takes time. What if the leads take 6 months to turn into revenue? That is a very slow feedback loop. And we find a lot of companies want to get there, but they struggle with that. And it takes a lot of investment, and it's actually really hard. And so that's where we're seeing a lot of companies focus. They know that they want to get into that, but maybe this point about, hey, we don't feel confident making data-led decisions is, yeah, we've got the front-end metrics pretty dialed in, the stuff that marketing controls, marketing can see, but going beyond the marketing sales handover and then sort of pulling that data back in and then using that to be actionable in terms of, oh, well, maybe, YouTube is a great channel for us, or maybe we should do more remarketing, or I don't know, maybe we should expand our email list. It's hard because they don't feel that confident about it. Are we really driving the right leads? If it takes 6 months to find out, well, then we've just spent 6 months and 6 months of ad spend driving the wrong leads, and that's a problem. I think it's definitely a problem if you're feeling that, and it's a good problem because we're just having a more sophisticated look at it, but that's where the investment is going to be going in the second half of the year, for a lot of companies. And while we're on that topic, let's talk a little bit about some of the obstacles that companies faced here. 35% of startups feel like the biggest challenge is just economic uncertainty and buyers being unwilling to change vendors. I've got who I've got. I don't know what's going to happen down the line. Now's not a good time. You can't sell to someone if they're not buying. Do we see that amongst our clients? And how do we feel about that one?
Yeah, I would say that we do. I would say 100% that we do. It goes back to what I was saying earlier about that lingering uncertainty. I think what we're seeing here is a split between how confident marketers feel in their ability to run their own organization, certain caveats aside, as we just discussed. But overall, they're confident in controlling the things they can control, but less confident about the things they can. And number one among those is buyer behavior. And so when sales cycles are longer, when acquisition costs are consequently higher, that forces marketers into, as I was saying earlier, a more defensive position because they have to adapt their methods to a more unforgiving environment. So I think that seeing those sales cycles and the shorter contracts that buyers are seeking, seeing that show up in the data here explains a lot of what we were seeing earlier in the data.
Yeah, and I think there is also some interesting differences and similarities between early and late stage companies in terms of what the challenges are. I mean, on the whole, very similar challenges. If you kind of drill down a little bit, surprisingly, budget's less a big issue for the late stage companies, right? Like maybe not surprisingly, but they're not calling that out as often as their early stage folks. Whereas, executive support is something that they're struggling with more often, right? Maybe it's just the size of an organization that speaks to both those stats, but it also could speak to, hey, you're well funded. You've got the resources you need. We're getting toward the end of this pathway here. The IPO window hasn't been open very long, or we can even debate how open it's been. Right. So maybe there's some pressure now hitting at the end of those companies for those key executives. And it could be that this next period is really important for those companies, right? They've got their budgets, but everybody's kind of covering their own bases when it comes to that political atmosphere.
Yeah, Ian, I thought that the differences between the challenges for early and late stage was really important. And early stage companies are more susceptible to this sort of economic uncertainty than late stage, which perhaps you might expect. And just on this challenges front, a quick shout out to the 4.3% of people who see absolutely no obstacles that would impact their ability to meet their revenue growth this year. Those guys are doing something right, and I just applaud their confidence. That's brilliant. Nothing in the way. Here we go. But look, on a serious note, on the challenges with buyers, Nicole, buyer turnover is a challenge.
It is. There were a few buyer behaviors that we highlighted in the report, and one of them was buyer turnover, comings and goings. So one thing that startup marketers are seeing is that, they're doing the right thing. They're doing their nurturing. They're trying to stay top of mind. They're doing all the things they're supposed to be doing. And then all of a sudden, the main prospect that they've been dealing with leaves their role or leaves the company. So now you're kind of starting over from scratch. And then conversely, you're really working hard to guide people through the funnel, get those leads down the funnel, doing all the nurturing that you're supposed to be doing. And then a new decision maker comes in and it's like, oh, hang on, start over. Now we've got to incorporate this person. And so what it's doing is, marketers are kind of starting and stopping and starting over and it all leads to, what's going to be a longer sales cycle, which is just frustrating when you've got what you think is a prospect who's really interested, seems to be a really good fit. And then either they're gone or maybe their decision doesn't carry as much weight because somebody new has come along. So, we talk a lot about layoffs, and that's certainly one factor here of just a lot of comings and goings, a lot of upheaval on the buyer side.
those buyers are commitment averse. 28% of startup marketers say that buyers are seeking shorter contracts than a year ago. And I guess, look, buyers are facing the same economic uncertainty than all these other startups that we surveyed are. And in fact, as we know, many of the buyers that startups are selling to are other startups, companies that are willing to take a bet on a smaller organization. We're sort of selling to each other. And so it is totally normal that those buyers would want to sort of commit for a shorter period of time because of that economic uncertainty. Here's a data point that I thought was interesting. 35% of marketers report that they're seeing the same level of buyer touch points before conversion as they did last year. We will know that. What was the data point? It used to be sort of buyers require 8 touch points before they convert. And what does that mean? That means they'd need to read or consume 8 different pieces of content from a vendor before they would actually fill in a form and convert, which was a big driver for producing more content, right? That number then, I think, ballooned to 17, I've seen in some instances, which is an awful lot. I mean, that's just a lot of content, even if some of those are social posts. But now perhaps that's sort of calming down. 35% say it's the same number. They're not seeing it increase. I guess that means that 65% of them are seeing it increase and change somehow. So maybe it's continuing. But maybe we're starting to see that sort of cool down a bit.
Yeah, I think when we all looked at this data point, we were like, oh my gosh, is the buyer journey getting shorter? Have the clouds parted and the angels strumming their harps? Like, is that what's happening? And then it was like, well, if you look at the other things, the other factors at play here, and you've still got commitment averse buyers, you've still got buyer upheaval, maybe it's more of a stabilization. Maybe it's just kind of righting the ship in terms of touch points. You know, maybe we've kind of hit like the magic number. I think a good follow-up question, if we had asked it, would have been, well, how far apart are those touch points? Because maybe, yeah, you only need 8, but your main stakeholder leaves and you go 3 months without being able to talk to somebody, or, you know, they're just like, I don't really know. Let me talk to my people on my side. Let me do some research on my own. So, you know, I think we wanted to jump the gun and say the buyer journey is getting shorter. I think maybe it's just getting right sized, which is still good news. I mean, if we know more of what to expect, and hopefully, you know, some of that buyer upheaval will start to settle. Maybe buyers will get a little bit more confident as time goes by, and then those factors won't play so much of an issue. But I think it's still quite a long journey. You need really to be prepared for people to be doing their research in between those touch points. I think now more than ever, you know, folks have always had to justify, hey, I'm picking this vendor and spending this chunk out of my budget, and for better or worse, I'm the one on the hook for that decision. That's always been the case. But I think right now on the buyer side, it's even more of the case. They're kind of sticking their neck out even further. So they may be having the same number of touch points, but there could be a lot going on their end that we don't know about.
And here's another data point about buyer behavior. As a startup, you often have to assure the prospect about your sort of stability. Are you going to be here next year once we've implemented this product? And over 35% of those that we surveyed said they're seeing that objection less than they saw it before. So maybe that's another sign of a sort of increasing customer confidence that startups are going to be around, and that objection to sale has been removed. Let's talk a little bit about when things are going to improve, Ian. What's the story here?
You touched a little bit about the challenges around buyer behavior, but as we look across all of our results there, whether it's customer acquisition costs, whether it's competition coming in and changing that buyer journey, whether it's a new entrant, whether the person leaves, all of them are saying it's happening less often than it did last year, right? So I'm the ever optimistic when it comes to our economic progress here. It's appropriate that I get the summary around, when will things improve, right? I made a little reference to it because I looked at this data, and what we see here is that almost half think it's going to improve in the fourth quarter this year. Another 17%, nearly 18%, said the third quarter this year. So, put those together, you got a pretty good plurality of folks thinking that it's getting better here in the second half of the year, like right about now. So that's how I started out, kind of saying, hey, it seems to me that maybe some of that pessimism coming into the year is lifting as, we see the biggest banks raise their targets for the S&P 500, as we see some successful IPOs pop out this past spring. Maybe there's some green fields ahead. Obviously, there's the presidential election, and there's strife, across the Ukraine and in the Middle East. But nevertheless, nearly half are expecting more openness to spending. So there's still a good portion that are saying, okay, well, let's wait to see until after that election. Let's look at, we got about 33% saying this could be as, after the first of the year, or even after Q1, 11% saying after Q1. But on the whole, to me, that's a pretty optimistic number. I would venture to say that if we had asked the same exact thing a year ago, as those layoffs were starting to mount, as the biggest names in tech were trimming, right, we would have gotten different results. I myself remain optimistic. I think we have seen the benefits of AI and its knock-on effects in the infrastructure space get everybody excited. And I think there's a lot that needs to happen in order to give that big macroeconomic boost that we need, where the rubber hits the road and starts, making money for people besides technology providers. But I think there's a lot of good reasons to be optimistic. I think there's a lot of consolidation that may be ahead around tech, and there's a lot of other headwinds. But overall, tech is carrying our economy more and more. This reflects the optimism about the future that it will continue to.
Right. And carrying on with my 4% of people who see no issues, no impediments to their hitting their revenue targets, there are exactly 0% of the respondents who said that they could not see any improvement in the foreseeable future. 100% see there's going to be improvement. So I think overall, a message of optimism from startup marketers out there, which sort of brings us on to sort of the key takeaways from this. And maybe we just sort of go around the table here with some of the key takeaways. Chris, when you think about this research here, what are one or two of the takeaways that sort of particularly strike you, or things that you would pull out?
For me, it's really the mood of cautious optimism. That I think every result that we've discussed today points to that in one way or another. We've all been through sort of unbridled tech booms when all restraints are off and the animal spirits are running high. And that's not where we are right now. But overall, and I think this is similar in a lot of respects to the larger U.S. economy, signs are good. The fundamentals are good. The vibes are a little troubled, but the basics are in place for strong performance, continued growth, and, the seeds of the next big run.
Nicole?
Yeah, I agree. I agree on the guarded optimism for sure. I think the whole trend towards more data is great. I think a lot of times marketers make guesses and they go on hunches and, I think this will work. And even if you're the smartest, most educated marketer in the world, that's still just a hypothesis. So I'm glad that startup marketers are more open to letting the data tell the story and seeing where they need to go and where they need to pivot, and being realistic about the fact that, hey, I need to get a little bit better at that. Maybe I've been relying a little bit too much on hunches and gut instincts, and sometimes they work and sometimes they don't. So I'm thrilled with that. I think it's a good step in the right direction. Anytime that you can rely on that data and then consequently be more efficient everybody's going to be happier. Your boss is going to be happier. Your investors are going to be happier. The board's going to be happier. Everybody's happy.
Yeah, just to echo what folks are saying, I don't think we're looking at an exuberant market by any means, but we are looking at a market that feels capable and feels like there's positive things ahead. And whenever you're working with a market like that, that's when creativity starts to come to the fore again. People are more willing to take risks, and that's when growth starts to occur, is when folks are sort of off that back foot and back onto that front.
Right. And if the number one inhibitor is economic uncertainty here, we're starting to see that ease. We're feeling it in tech, but the rest of the economy is doing pretty well. Inflation is coming down. Eventually these interest rates cuts will come. The stock market is being pulled forward by, Nvidia and the Magnificent Seven. But, in general, it's doing very well. And so it's easy to feel, hey, we're in tech and, it's been tough. But in a broader macroeconomic conditions, things are pretty good. So hopefully that will start to sort of feed into the confidence here and probably reflects the confidence that we see in this report. So Chris, Ian, Nicole, thanks for joining me here today to sort of really take a deep dive into the Startup Marketer Outlook. And we will provide a link in the show notes where you can get your copy. There's a lot more data in there than we've had time to unpack today. There are all the splits by early and late stage. There are splits, as I said at the beginning, by sector. And, certainly even just there, there's more confidence in cybersecurity and in AI and in enterprise than there are in, say, hardware, for example. There's a lot more nuance to this that if you download it and take a look, you're going to be able to find information that's really useful for you. And that's our intent with this. So thank you very much for all of your time today here, gang. And thanks to you for listening. And we hope you find the report useful. And we look forward to talking to you next time. Well, that wraps it up for today. But two quick things before we go. First, we've just published our Startup Marketer Outlook, which is a report based on a survey of over 250 senior marketers, early and late stage startups, all about their plans for H2 2024. So please go to firebrand.marketing, and in the resources section, you'll be able to download your copy there. Second, if you've enjoyed the show, please give us a rating or a review. Obviously, subscribe. We really appreciate that, since that helps others discover the show. Thank you for listening, and we'll see you next week. And in the meantime, get out there and crush your marketing goals.